to introduce Roger Spitz from the Disruptive Futures Institute. He is going to be covering risk in the era of systemic disruption, unpredictability and artificial intelligence. So please do give Roger a big round of applause and welcome him to the stage. Thank you.
Thanks, Emma. So, is risk dead? Is data dead? So the question is really data, right? We have this obsession where we worship data as an oracle for decision making. And I think the question is fair as to how reliant are we on data and how useful is data. I trained as a chartered accountant a few years back, City of London with EY, and then moved on to investment banking. I was global head of M&A covering tech for many years. In that world, data drives everything. Your synergies calculation, share price expectations, everything. It gets worse. I'm in Silicon Valley today. The obsession with data is just what you know it to be. But today I'm seeking redemption. But I think there is a fundamental, serious question around the usefulness of data. If the markets ignore $36 trillion of debt, that's fine, that's ignorance. But what if you can no longer quantify, measure, and evaluate the data? And there's no data on the future. And so the question is, how predictable or unpredictable is our world? And when unprecedented becomes daily, or rare becomes less rare, do we need to reframe how we think about the world? Now, we follow the various indexes for what they're worth. This one is 40 years old, or 30, the uncertainty index. And past few years have been higher than others, right? We follow that. One indicator. IMF, global economy entering a new era. JP Morgan setting up a geopolitical risk entity. Tectonic shifts. Sure. And then you have the volatility index, the risk indexes, which no doubt some of you are pretty focused on. IPCC, what are the irreversible human-made risks around climate? How far away are they? Or is the future encroaching on the present already? Maybe when you're looking at the kind of $1 billion plus climate events, and you're seeing none to half a dozen per year, and over the past few years to 25 per year, maybe it's normal course of business, unfortunately. And when you look at the security event, everybody rightly focused on Vance and the problematic. But there's one word that's important beyond the news flow, which is multipolar. What does multipolar mean? Why is it important? How does it link to unpredictability? Because multipolar, you're not necessarily sure about what are the actors that are going to be leading. What are the rules that are going to be emerging for whoever leads? And how will there be resolution or alignment between the actors who might simply structurally have a view of the world which is incompatible with alignment? And that word, multipolar, which was the word chosen for the Munich Security Conference, is an important word when you're thinking about degrees of predictability or otherwise. And some of us, not wanting to be too dramatic, but some of us follow maybe the Bulletin of Atomic Science. And the clock, it kind of measures how close we are to midnight for pretty existential considerations for humanity. The 89 seconds is the closest it's been to midnight, and that was decided a few months ago. Now, this is not meant to be necessarily negative or anything. But this particular feature is not something we can ignore because it's fundamental. And I know that during a lot of the 2 days, there was a focus on geopolitics and, if we can call it that, the end of the kind of 80-year period of world order, or should we say Western, US-led world order. And there's nothing wrong with alternatives. Probably the world needs a readjustment of what world order looks like and who's leading it. But the problem with the multipolar in the context of existential risks is if we don't achieve those alignments. And while it's not the first time in history that we have non-order, if we consider the 80 years of pretty structured world and the world order as exceptional, that's not novel. But what is novel is not having that kind of visibility, predictability, and ability to kind of align with multi-pluralism, where you have AI, biotechnology, climate, and those kind of risks. And that is the first time in history that we have the conjunction of those things. They don't wait in line, they work concomitantly. So said differently, we have an increasing cost of relying on the assumption of a stable, predictable, linear, and controllable world. There's an inverse relationship between predictability and uncertainty. And the challenge here is not that the world is necessarily uncertain. It's relying on the assumption of that predictable world to the exclusion of anything else. So if you take Silicon Valley Bank as an example, second largest bank failure, many of us in the room will know that it was one or two stupid assumptions, right? Do you sort of bet on long-term interest rates staying what they are when you're very exposed to long bonds in a world where governments have been printing money for a decade and you have geopolitical events which are feeding energy security and other things that could be inflationary? Maybe it's not the best assumption to make. Do you assume that the price and the valuations of startups will continue to rise? Maybe not the best assumption. But I actually think that it's something else that maybe triggered it, which is more systemic. In 2008, during the financial crash, we didn't have social media. And when one VC on Sand Hill Road in Silicon Valley told one of his portfolio companies, I hope you're a little bit diversified and don't have everything at SVB, probably took a few seconds for tens of millions or whatever people to know about that. Because unlike Capra's It's a Wonderful Life, this is a world of immediacy and of warp speed. And that is systemic in different ways that are maybe unexpected. And this is what I want to spend a moment thinking about, because ultimately, in that case, maybe our challenge is the assumptions we make about the world, not the fact that the world has the features it has. If you take NATO made a little assumption. Peace, time, dividend. A three-word assumption which meant that it didn't need to fend for itself. We weren't expecting territorial wars in Europe, and we certainly didn't need to project power. Germany had a variation of that assumption which went further because their assumption informed their energy security as well as their defense budgets. And the little assumption was, if we have a very good relationship with Russia, what could possibly go wrong? And so the point here, I think that's interesting, is really the challenge is the assumptions we're making, not necessarily the nature of the world, which is what it is. And this is because change is changing. But change isn't new. And for that matter, change isn't necessarily negative. Change is neutral. Can be negative, can be positive. Sometimes it's clear-cut, sometimes it depends on how you see the world and how you prepare for it. The wheel, I think, was invented in 3500 BC. That was fundamental change. It's not recent. So what's changing with change? I think I see three phases of evolution of disruption. 1940s, 1950s, the important work of Joseph Schumpeter, creative destruction, and it was institutional. After the war, you rebuild, there's destruction, institutions evolve, and actually it kind of has a, I don't know what the word is, but a purging, a sort of iterative, institutional effect where some growth and some progress and all kinds of things arise through that process. Nothing necessarily, I mean, in that case, war, of course, is a terrible thing, but the fact that things change and reset isn't necessarily a negative per se. Maybe we need that more often. And that is creative destruction, which I call disruption 1.0. Most people, when you use the word disruption or hear it, will probably think technology, innovation, and some might think Clayton Christensen. Disruptive innovation, right? And disruptive innovation is a very important, fascinating concept, but it's quite specific. It's often related to an innovation, a product, a market. It's related to an incumbent, where sort of more agile, newer player might be doing something differently to target a different market initially and then go back to it. You can understand it. You can isolate it. You can describe it. You can replicate it. You can say this is disruptive innovation because of these 4 rules. This is not disruptive innovation. Now, systemic disruption, so moving from 1.0 with Schumpeter, Clayton Christensen, disruptive innovation, disruption 2.0, I think we're in an era of systemic disruption, which we call disruption 3.0. And the features are that it's systemic. You can't isolate or separate it. It cascades into different things. And therefore, if you're applying the same lens of wanting to be specific about, oh, this is what's disrupting, let's wait for it to finish, let's see the effect of it, let's quantify it, let's have a predict and act model on the basis of that particular event, that is the single biggest mistake, is treating disruption we're seeing today as isolated, specific event. And there's a reason for that, and that reason is beyond complicated. And I mean it literally, it's beyond complicated. So what do we mean by that? We're going to introduce the distinction between complicated and complex. Complicated is a linear environment. You know ex ante, if you do something, what the outcome is. You have known unknowns. There are a set of right answers. You can rely on experts, on knowledge, on expertise. It's predictable. And that is some of the world. How do you send a probe to Mars? I don't know how to do it, but it's understandable pretty precisely. AI is good here because it's predictable. You can, at scale, have pattern recognition, whatever you want. And so here, it's drug discovery, for instance, is a great example. Drug discovery works because we have some understanding of the human body and another number of other things. Now, what happens with complex is that it's nonlinear. So nonlinear means that the outcomes can be disproportionate to the inputs. They are unknown unknowns. You don't necessarily have an answer at that point in time. It's trial and error. It's a discovery process. And the problematic with complex is that if you're applying the playbook, the experience, or whatever it is, to complex, it's not going to work. You need to look at the world differently. You need a different filter for things that are complex, because it doesn't have playbooks. And that is a very important distinction. The danger, for instance, with all the world applying AI to certain things, it's amazing what it does with many things, drug discovery, you name it. But when you're putting it in the complex box, humans are less agile at critical thinking and at understanding what's happening in the world, connecting the dots. Humans are becoming more machine-like, while machines are becoming more human-like. And so you're going to have a problem. Because basically, we know that AI is the answer to everything, but if we actually don't know what the question is for. And so this is an important distinction which plays directly to predictability or what isn't. Now, many of us will know the distinction, it's 100 years old, right? the Knightian distinction between risk and uncertainty. So risk, you have a sense of the variables, you can probabilize it, might get it wrong, but if you drive at a certain speed, the risk of an accident, if you smoke X cigarettes, the likelihood of getting cancer, something. Uncertainty, you have a sense of the variables, you might not be able to probabilize it, but what's the likelihood of having a recession in the next 5 years? Which party might be elected for the next government? It's like there's an answer to those questions. Deep uncertainty, you're in an environment where you basically don't know the number of variables or the possible futures, possible outcomes. You certainly can't probabilize them. You can't put a hierarchy to them. You don't necessarily have an agreement as to what the hierarchy would be or even how you might mitigate them. And you don't know how they might interact amongst each other. Will they be general intelligence with artificial intelligence? What exactly is the impact and the nature and the scope of climate in different regions at which timing? Will you work and live in space? What does longevity look like? When you put all that together, the geoeconomics, etc., you're basically in an environment which is deeply uncertain. So quick poll, quick question for the group. We're going to ask you to think about how much of an environment do you think is deeply uncertain today? From not at all, what are you talking about? Pretty predictable to me, to some, to really deeply unpredictable throughout. Okay, so it's not finished yet, I'll let you all vote, but there's a predominance about 50-50, right? Which is interesting because, and listen, I don't even know whether, what the implication is if it was 50, 75, or 25, but one observation is that you can't isolate systemic, it's systemic. So the question for me would be, if it is 50%, how is it impacting the things that are predictable? Do we think we isolated them? Do we think they're immune from the rest? So that would be the one observation. But it's an interesting thing, and it's interesting. Maybe I spoke before. I should have in terms of influencing the poll. I'm sorry if I should have given it a certain amount of time. But anyway, it's a dynamic session. But interesting to take the pulse. What's also interesting is that no one is feeling that it's overwhelming at this stage. Although my comments went from 35 to 50%. So this environment means that it's different from, we know all the parameters, there is an answer to the question, and therefore this is the answer. To an environment where we need to think more broadly about the possibilities, more broadly about the scenarios. Not in terms of sensitivity analysis, which I put in the predict and act paradigm, but in terms of really thinking a multitude of possible scenarios that may or may not arise, some that are discontinuous, some that are surprising, some that are maybe shocking or implausible. And one of the ways we want to calibrate that is to kind of say, okay, thank you very much, it's unpredictable, what do I do now? And there are degrees of unpredictability. I come from South Africa originally. In South Africa, the big five are the big animals you're most scared of, the more powerful ones, and majestuous and admire as well, right? So it's the lions, the leopard, buffalo, rhino, elephant. But in our complex world, the unpredictable one, asymmetric, we have different animals. We have the gray rhino, which is from Michel Walker's wonderful book. It's charging at you. You need to think about what do you actually know that you're ignoring, and that if you ignore it, it's like COVID in March 2020 or whenever it was. It's like you gotta react to that. The black elephant is the elephant in the room. It's the things that are there, they're giant, but you can't reach a consensus, you choose not to ignore it, you choose not to action it. Those are the known unknowns. They can turn into gray rhinos. So you need to think about for how long you're gonna leave that in the sort of corner. And then the black jellyfish is the one really to think about, right? The black jellyfish, we all understand that climate change increases the acidity and temperature of the ocean. And we understand through science that that increases how many jellyfish there are. But when nuclear reactors started breaking down, we didn't think about the second and third order implications of those jellyfishes clogging up those nuclear reactors. So it's thinking about what are the next order implications of things? What if something were to continue? And those kind of questions. And then the black swan is what you know it to be, which is unknown, which is completely unpredictable. Now, black swan, two points. One is that even though it's unpredictable, you can still prepare because you can build resiliency, you can realize that rare is becoming less rare, you can avoid the myopia around pushing aside rare events when actually they're becoming the norm. Now, the other thing about black swans is that most black swans, when you have your board or your CEO tell you, black swans, sorry, my friend, they are not black swans. They are signals they chose to ignore. They are preparations they kind of skimped on. So it's very important, and the butterfly effect is basically how all that connects. So what does it mean? It means maybe your strongest model is what if. You know what happened with the Fed and all the central banks? They're pretty good economists, pretty good computers. They sort of said, didn't realize inflation would be the highest for half a century, sorry about that. Thought we could control it, didn't have a clue. Interestingly, Cleveland is the first reserve a few months ago that announced that they're doing different multiple scenarios as opposed to betting on a single thing. And so what was the problem with the central banks? It's not that they made assumptions or whatever, no choice to do otherwise. They relied on the outcome, on a singular outcome of that to the exclusion of anything else. And that basically is the danger of assuming you're in a stable, predictable world. What does it mean for the insurance industry? It means actually the best insurance is the one you anticipate and maybe don't need, maybe preventative. What does that look like? Maybe wearables, maybe smartware, maybe other things that kind of can anticipate, think what if, and actually not need the eventuality. But to do that, you need resiliency, or to use Nassim Taleb's language, antifragility. Antifragile is basically, not only is it resilient, but you get stronger with shocks. And it's the opposite of fragile. So take share buybacks. Last year, probably there were $1 trillion of share buybacks. On average, $500 billion of share buybacks. Great, you get a market share price for 2 minutes. You're happy with the MBA course and money you spent at Harvard that teaches you about theoretical financial theory and whatever, except that that works in a predictable, stable world. When there's a shock, that cash is gone. And guess what? Who's anti-fragile? Maybe it's the companies, not to admire Silicon Valley that has its issues, but who have hundreds of billions of dollars on their balance sheet, and the market doesn't seem to flinch, as opposed to the airlines or whatever banks that come begging the minute there's a shock. So we need to think and understand that that's a different predicament. And when you're looking at being anticipatory and asking the what if question, and then hopefully you have foundations that are resilient or resilient plus with antifragility, you then need to think about, okay, but anticipatory what if is a bit further down the line. Resilience is a feature, fine, I see the logic, but how do you reconcile it? And you need feedback loops to inform both how you're future prepared for the longer term and now. Jakarta is a great example. Jakarta has basically a system whereby, because of the urban topography and the floods and the weather, they have sensors, they have crowdsourcing, they have a million things for real-time management of floods. And that constantly is informing policy, investments, and infrastructure. And it's that kind of emergent agility where you're kind of reconciling the longer-term strategy and vision and investments or whatever regulations, where you're tying it in with what is actually happening on the ground. And to wrap it up, we call this basically being AAA. A lot of you will appreciate AAA plus, so be AAA plus, which means you have anti-fragile foundations. You're thinking longer term and being anticipatory. You're able to reconcile that in the here and now with emergent agility. Now the thing is, if you don't have agency, none of this work. Agency is like an option. If you don't exercise it, it's of no value. And so the question around agency is not a trivial one. Is the insurance industry, is the future of risk, is the future of finance, is the insurability building its resiliency, its anticipatory and agility capabilities, or is it working on the assumption of a stable, predictable, predict and act world, or moving to an empower and maybe ex ante insurance with its more empower, imagine, and preventative? Thank you very much. Let's move to the Q&A. What do we have? Guillaume, thank you. The increasing uncertainty is debatable. Is there back-trading bias that makes us view history as certain simply because it has occurred? So it's a great question, and to be honest, of course I suffer from not only bias, but the futurist trope of peak of uncertainty, yada yada, right? It sells books, you do that every year, peak of uncertainty, come to my events. Well, I'll let you all judge. I'll let you all judge everyday events, whatever you wish to measure, and whether this is kind of business as usual. But I would say that the bets are on, because the implications of the non-world order, the implications of some of the existential risks we talked about, which have not existed in prior periods of history, the combination, because these don't wait in line, AI doesn't wait in line for climate to get resolved, for social dynamics, for geoeconomics, etc. The combination at warp speed in a nonlinear exponential way makes me cautious to recommending you that it's just a fad and just don't worry about my futurist tropes. But I'll leave it to your better judgment. But thanks for asking it, and you're right to challenge. How can we be ready to the next big thing without being able to predict it? Well, exactly. I think that insofar as you're going to predict and act, you're never going to be ready. Because guess what? If you can't predict it, there's a reason for that. So what you can do is you can spot the signals. You can spot the signals that are emerging, things you wouldn't pay attention to, things that seem surprising, maybe even laughable, maybe even implausible or impossible. And you think about them, and you start noticing it. The way you see the world, the assumptions you make, will inform how you prepare and will inform how you respond. If you apply first principles to the assumptions you make, as maybe the Fed could have done, as maybe NATO could have done, as maybe SVB could have done, as maybe, etc. The list is long. Maybe the challenge there is just imagining different possibilities, and the preparation isn't to get the correct predict and act outcome. It's the virtue of thinking that there might be a broader set of possibilities and that you need to build resiliency and you need to be able to react real time, but not to the detriment to thinking longer term about different scenarios and preparing for those, informing different actions on that. Just as an aside, some of the questions are around this topic. With the head of Foresight from AXA, we just published by our friends here in the risk journals an article which is reasonably detailed on these topics with very concrete examples around what the risk industry can do. So if the topics appeal to you, if you think there's either curiousness or agreement or whatever, that is done with someone who is in AXA and head of Foresight there, Olivier Desbier, so that might interest you. What risk that isn't yet quantifiable worries you most? So I spent a lot of time with the World Economic Forum. I was there on Friday for our global Foresight network, spent a lot of time with some of what they consider people who kind of views are worth kind of appreciating, and I also support them with their risk reports. And I don't know if you noticed, but this year's risk report, I thought, is the one which connected the different risks in the most interesting way by reminding everybody exactly this theme, which is that it's systemic. And I think the best advice that I would give for risk managers is to not consider that this is just a futurist trope of peak of uncertainty, but think that maybe it is more systemic. Maybe the point of risks is to look at how they interact and cascade in a way where you may not be able to quantify them. And therefore, maybe you price based on resiliency of the target, not of your resiliency from the kind of regulatory requirements, but if you're insuring an entity, a country, a region, or whatever, maybe you're thinking about how resilient is that? Maybe you're thinking about preventative. What is ex ante insurance, the one you might not need less? What are the initiatives that can be anticipatory that you can do that basically reduce the risk of insurance? So there's no longer kind of an ex post predicament and predict and act reliance. I think we're on time. Thank you very much, everyone.